Good Saturday morning. Hope everybody's doing well this weekend. We're a week away from July 4th. Enjoy the World Cup. Enjoy whatever you're enjoying. We have a big week coming up in the stock market and in this country. In this video, I'm just going to list off a couple of stocks that I think are good stocks to not only buy for now, but going forward for the rest of the year and beyond. And you see a lot of people saying in this time, take note of the stocks that have relative strength. If you're a day trader, then you have other people you can listen to, and they'll give you some, pump and dump stocks that won't last for a long time. But the way you get rich, it really is long-term investing. And I want to talk first about a little bit about what happened this week, especially if you're a trader or if you're a long-term investor. I want to talk a little bit about what happened with the flash crash and what has been happening with the hyperscalers, which is a new name they're given to mainly the Mag 7s and the semiconductor stocks. It's very important to talk a little bit about what happened on Thursday and Friday of this week in the market. And then I'm going to talk about a couple of stocks that I have been owning and continue to buy on the dip that I think are obvious winners. And it's not going to be anything that you haven't heard of before, but we need to talk about why the hyperscalers, as they're calling them now, kind of a silly name, but it's a cool name, so we'll go with it. Why companies like Microsoft and Meta and others have been doing pretty poorly, actually just relative to the index, not just to each other. Obviously, Microsoft and Meta, two of the Mag 7 stocks, these are stocks that were leading everything. We always talk about the concentration of how much of the indexes are held up in these stocks, but they're doing very poorly. A lot of these stocks, they're saying, are in a bear market now. Well, let's talk about what happened on Thursday. So, Thursday, I lost a lot of money. And I kind of figured that was going to happen. I kind of figured they were going to do some shenanigans. First of all, on Wednesday, it would have been a great time to go long on the index at the very end of the day. I don't even remember what the price action was, but it was very tentative up until Micron's reporting. And of course, Micron is going to be one of the main stocks we talk about in this video. If you had gone long on Micron or the 2X Micron ETF or just bought calls in the NASDAQ, you would have made some good money going into Thursday morning. But there was some bad news that had been coming out a couple of days before about Apple raising their prices, and then they made a formal announcement. That was a rumor, and then they made a formal announcement, and they had to do it right before the market opened. And that just threw a curveball at everything. I think Microsoft also announced regarding Xbox, I think that they're going to increase their prices on some services. Now, the reason this is bearish news, at least at the moment, is this is in combination with all the CapEx spending that's going on. They're putting a lot of their profits back into AI spending, data centers, and deals that they're making with these other companies, the neo clouds, and so on and so forth, as well as their own internal research and development. So you have massive spending. Massive spending is going into AI development and build out and research. And at the same time, while all that's going on, because of the shortage of memory and microchips and all these things, now these major companies are raising their prices. So it was a bad day, horrible day to be in calls on the index, 0 DTEs. You live by the sword and die by the sword, but there is a particular way I'm not going to get too much into because it's a little secret of mine, but there's a particular way that you can trade the index with very high accuracy. There's an algorithm that the hedge funds use and the institutions use, and it's very easy to predict it if you follow along and do your own analysis of that. Technical analysis regarding stocks, a lot of it's nonsense, but if you're looking at the index and you're looking at it on a daily timeline, it's not so much nonsensical. It's actually the best way to look at it. Long term, you want to look at fundamentals of companies and the themes in the market and what actually people need. And I'm going to talk about that very briefly. But the NASDAQ had a falling knife, if you're familiar with that term, and it just went straight down for the first 30 minutes of Thursday morning. And I've never seen anything like that before, never. Not me personally. Now, we forget just a couple weeks ago we had a minus 5% drop in the index in a day, which was one of the worst sell-offs of all time. But it was over the course of the entire day. We're talking about a 3% drop because the NASDAQ was actually up about 2%. We're talking about a 3%, just a straight sell-off, violent sell-off in the first 15 to 30 minutes of the open. And there was no way to bounce that until about 10 o'clock. And by then, a lot of people got destroyed, thinking that this was a short-lived bounce. Should have known what the news was, but there was no obvious news. It was just a reaction to Apple selling off, and that triggered a broad market sell-off. So a little bit of this video is me coping about how much money I lost, but that is something you rarely ever see. When the RSI is a 4, it was like a 4 or a 5 on the QQQ. It's absolutely astronomically stupid how it got that low. The sell-off was extraordinarily overblown, and I think Friday's rebound showed that. And if we have a very strong weekend in the July, I don't know off the top of my head if there's any economic news coming out, but it's a slightly shortened week. Friday will be a half day, I believe, and we have July 4th. It's a very good time normally to buy stocks in July, or at the very beginning. So now let's talk about some stocks that, in my opinion, of course, this is just my opinion, not financial advice, but in my opinion, these are the stocks to look into, and some stocks that I would maybe stay away from now, for now. So number one, I'm going to say, well, first let me talk about my number one pick of all time. You've heard a lot of people talk about it. It's AMD. Now, years ago, nobody wanted to touch AMD. It was a super cheap stock, great company. Nobody wanted to touch it. At the time, people were buying NVIDIA, and that had kind of been the case for a long time. People were just buying NVIDIA. They actually do not quite the same thing, but similar. I knew about these companies because they were very entrenched in the PC gaming marketplace, even though I myself didn't really play a lot of PC gaming. But I knew about NVIDIA and AMD because they were making components for gaming computers. Like, that's what people were using. NVIDIA used to be mainly for like high-tech, gaming PCs. Now they're for high-tech AI compute. And so is AMD. And I always looked at AMD as just a very cheap stock relative to NVIDIA, very undervalued. And I thought, there's nothing much else to buy. It's AMD and NVIDIA. These are the compute stocks. And I was right. And now Intel's back in the mix too. And I feel bad about selling Intel when I had it for like $19 about a year ago, because the stock wasn't respecting my money. And so sometimes you just get out of a stock. But if you're a long-term holder, then that would have been a great long-term hold, because sometimes you just never sell. You wait for the market to price things in. But if you're heavily invested, then you might need to, take your profits or take your loss and get out. I'm heavily invested in AMD. I'm up 400% on my AMD because I was accumulating this stock for years when it was in the $100 range, and then sub $100, and I've been holding with a $111 average, and now we're in the 500s. It's glorious. I would never sell AMD. AMD is both like a buy and a hold. You look at the stocks that have relative strength, and AMD has been very, very strong, along with Micron and the other memory stocks. The semis have been very strong, and they are the most volatile, probably, even more than maybe the memory stocks have kind of leaped ahead in terms of volatility. But the memory stocks, there's a lot of dummies that have tried to short the memory stocks, and they just don't understand how valuable memory is. This is not a meme. SanDisk is not a meme stock. We all wish we bought SanDisk when we had a chance. I personally bought Micron when it was $100, and only feel stupid that I didn't go all in on Micron because I didn't realize how important Micron actually was. I thought it was just another semiconductor stock. It was a memory stock, and It's funny that none of the institutions, none of the financial gurus or institutions called, not a single one of them, in my opinion, called out Micron or SanDisk to buy. And not very many people were calling out AMD either. So when you're smarter than the hedge funds, you just don't have the same money as them. It hurts, but that's the situation that I'm in. So I think AMD, every dip, especially anything around the 500 range or sub 500, not financial advice, but it's been showing a lot of strength there. And I personally would never sell it if it holds 500. I think this is the next company to get to $1 trillion market cap. I think they've said the total addressable market and by 2030 or in the 2030s should be $1 trillion. Obviously, we'd like the number to be higher because this is a company that's, I think, the next company to be valued at $1 trillion, but $1 trillion total addressable market is enormous, and that's higher than the projections have been in the past for CPUs. So, given that AMD is the predominant, possibly the predominant in the world CPU manufacturer at this time, a lot of people have been saying to go into ARM, and ARM did have some news about a GPU and a CPU in one. I see Intel has also talked about they have apparently the world's first sub 1 nanometer or whatever the hell it is semiconductor microchip. There's competition out there, but AMD is the one that has the excellent stewardship of Lisa Su. And this is a company that I'm extremely confident in because they're very confident in their and there's a connection to NVIDIA there, sort of with Lisa Su and Jensen being related. And they're both in the same industry, and relative to NVIDIA, AMD's been holding up very well. Again, they don't do quite the same function, but they've always been kind of linked together, and I think they will continue to be. So as long as this AI thing is going on, I think AMD and NVIDIA, they're going to continue to be. And NVIDIA is looking quite good under 200, you know. It's I wouldn't want to see it much cheaper unless you want to buy into it, but it's looking very good. But AMD, I think, will be the next one to get to $1 trillion. I'd be surprised and shocked and a little upset if it doesn't get to $1 trillion. It's close, like 800 and something million, or billion, I should say, billion, of course. That's the company that I think is going to keep growing. It's very expensive right here, but I think it's going to keep growing. You look at what happened to Micron and some of these other memory companies. Come on now. You think AMD won't continue in that trajectory? I think it will. So sometimes the strongest thing to buy is the one with the momentum. For memory stocks, just very quickly, I don't think they're done. I sold my Micron in the 370 range, which I feel horrible about because now it's over 1,000. And I was reading some nonsense about it was a combination of the Iran war going on and some nonsense about memory stocks being overblown, that the TPUs don't need as much memory or something. And I panic sold on that news because I just wanted to lock in my profits. Should not have sold. So when the DRAM ETF came out, I put a lot of money into the DRAM. And excuse me, I'm feeling stuffy this morning. I put a lot of money in the DRAM. I think DRAM is getting a little expensive for right now. They might have a pullback. There's a lot of volatility in the Korean markets, which will drag DRAM down or also pump it up. But actually, the relative strength has been in Micron and the American companies more than the Korean volatility, more than Samsung and SK Hynix. It's been Micron leading the way, SanDisk, Western Digital, Seagate, and a few others. So the best way to pick memory would just be to go in the DRAM ETF. The inflows into that ETF are enormous and not nearly as cheap as buying any of the individual ones. But, there could be another pullback. If there's a pullback, I would buy this. I think for the next couple of years, the memory companies and their revenues will continue to go up. I saw a news story about Apple, because of their memory shortage, trying to get the government to okay them buying from China. A lot of people have been saying that China might flood the market with cheap RAM. But I don't see it happening. I think that no matter what, people will go with the best of the best. They will go with NVIDIA for the chips. They will go with these memory rock stars for the memory, in my viewpoint. But we'll see. These are the strongest companies in the market, some of the strongest companies we've ever seen in terms of their relative strength. And I will not say pour your money into these here, but I would buy DRAM to get continued exposure because it can go higher over the course of time. Maybe a pullback here or there, but it can go higher. Google, my number one pick probably for the rest of history. I think Google is the everything company. I think they're the closest thing that anyone's ever come. Maybe Amazon is close too, but Google is that company that really has a foothold in almost everything. They have invested their money so well, and they make so much of it. The most profitable company in history, making over 120, or actually I think almost 200, sorry, close to $200 billion annual profit, not revenue, profit. Google is the company to buy and hold forever. People were absolutely out of their mind when they weren't buying Google sub $200. It was languishing for years in like the 100 to 150 range. And then once it got its lawsuits in Europe out of the way, and people started realizing, once people started realizing how powerful Gemini was, that Google has some of the most intelligent LLMs ever made that they haven't even released to the public. Once they realized, oh yeah, they still have Google search, which isn't going anywhere, even if AI starts to chip away at it. Google search, if AI collapses, there is no replacement for Google search. If it doesn't collapse, then hey, they've got Google search with Gemini, with built-in AI. The advertising campaigns that they run on the internet are undefeated. Advertising revenue is part of Meta's game too, but they don't have anywhere near the reach that Google does, with YouTube especially. I know from a YouTuber perspective, the amount of money you can make from a YouTube video is enormous if you have the right market, if you have the right, what they call CPM, which is the cost per mile or cost per million, which is really the cost per 1,000. The ad revenue sharing is incredible. It could always be better, but it's nothing to complain about. If you're high frequency making videos, Google's got everything, They've gotten into hardware, they've got Waymo, their software, their cloud data. Their business model is impeccable. Maybe the best company ever. And they're getting cheaper now, almost back in the sub 300 range. I would buy a lot of Google personally under sub 300. You look at how quickly Google ran. Google was very briefly the most valuable company in the world, surpassing NVIDIA briefly this year. They ran so fast from the 200s to 400 plus after the market started rebounding in March, April, late March, early April. And so we talk about relative strength, and Google is very strong relative to the market. Mainly, I think the CapEx that they've announced, the selling of some of their shares to fund the CapEx, is the reason that it's been under 400. And I think they recently announced some more spending on CapEx. So they've had some very volatile days, as has Apple, Microsoft, and the rest of them. So the strongest stocks outside of those have been the memory companies, the memory cartel, and AMD, and a couple of the underinvested semi stocks. Obviously, software has been getting destroyed. But if there was a company that I also believe in, it's Microsoft. Maybe the other contender for the best company ever. A lot of people don't like Microsoft, but I like Microsoft actually more than I used to. I actually like Microsoft a whole lot more than I used to. There's some business practices that I don't like from a lot of these companies. Microsoft has some business practices that I don't like, but their boat is huge. They obviously have Windows. They have cloud computing, Azure, they have Copilot. I don't know where Copilot ranks among the AI, but I'll tell you something that might surprise you. I do use Google search on my phone. It's built into my, iPhone browser, but it's built into the Safari. But on my computer, I use a lot of Microsoft Bing. Now you're gonna say I'm stupid for using Microsoft Bing, but one thing I like about it is the rewards program. I search a lot of stuff, and every time you search using Microsoft Edge or Bing, if you have an account, they give you rewards points. You can redeem those for gift cards. You can redeem those, enter giveaways and stuff like that. I really like that. I'm not aware if Google does that, if they have a similar program. I'm surprised that they don't. I actually really don't know if they have one, but I like Microsoft. I like that they do that. Um, I'm looking at, but they have a lot of problems with their gaming sector, and they've spent a lot of money over the years in their gaming, acquiring studios like Activision for like 70-80 billion dollars, and Bethesda and so on and so forth. But as a gamer, they own a lot of great stuff. They own Minecraft, they own Bethesda, they own Activision. They have a lot of brands that they own. And the Xbox brand isn't doing too well. But, they have a lot of revenue. They also have a lot of cost, but they have a lot of revenue from those acquisitions and those things that they own. So, on the software front, on the cloud computing front, even on search, they've got people like me using their search. Obviously, I've used Google for my whole life. So I think Google's still the best for search. But I like Microsoft. I use a lot of Microsoft because I don't always like Google tracking my data. I know Microsoft does it too, but I have just a weird way of looking at it. I don't really care if Microsoft is tracking it because I don't really use Microsoft for much outside of just searching things. Whereas Google, I have accounts with Google, email accounts with Google that I use, and I'd rather not keep track of all the stuff. I'd rather than not have all of the shit that I've been using for decades and decades. I kind of started over using Microsoft, where I just have a kind of a trash filter of whatever I'm searching for. I don't really think about it or keep up with it. I don't know if that makes sense to anybody, but maybe I'm just OCD about it. But I like, as a consumer, I'm actually looking at what Microsoft is doing, and I know they have some, there's a lot of consumers that don't like them, but I think they do some good stuff. Their revenue is enormous, their income is enormous, and relative to the NASDAQ, they're doing very poorly. For a software company that's always been here, and I think always will be, I think Microsoft is the best buy out of the software companies. Kind of getting stupid cheap. It was not good that it ran up to 460 and back down to 360, but it was the entire sector being down again. Look at what happened to Oracle. Oracle just got destroyed. I would stay away from Oracle, but it's getting cheaper again where I like to buy into it. But I'd stay away from it for now because that is a nasty drop. And I don't know if it's going to bottom so soon after a 19% drop in a week. But Microsoft getting cheaper again. You wonder how low can it go? If it ever gets sub 300, just like Google, I would be buying even more Microsoft personally. And what I like to do is buy the 2x leveraged ETFs, which are very risky. But I was up 60% on mine when Microsoft ran up to 460. I bought it at 21. It went to like 36 on the MSFU ETF, which is the one I like. Now it's in the red. Should have sold it in compounded gains, but I didn't expect this retracement. I think Microsoft, a lot of the fears about AI are irrational. I think there's something to have a concern about, but along with Google, another thing you have is obviously they own a lot of Anthropic. Microsoft has huge deals with OpenAI. So all of the hyperscalers, they have a lot of leverage over these other companies. They're not exactly going to destroy the established companies. I don't believe. I think they'll be working together for years to come. And I think that these companies, I think a lot of it's just the CapEx and these companies, they are spending a lot of money, but they have the money to spend. They have the revenues to show for it. So I think it's a dumb reaction. There are obviously a lot of investors that are piling back into, at least on paper, these stocks. But I think software will rebound. I don't know when, but I think it will. I think it's a question of when, not if. And the one I would go to would be Microsoft, personally. I like CRM, I like Now, but a lot of people have told you to buy these stocks when they looked like they were breaking out, and then they came back down, and they're even down more. So I would stay away from those. But Microsoft, I would continue to accumulate more of Microsoft. You obviously have the 2x leverage ETFs, which are a lot cheaper, and I think they're actually better for the long term, because when they finally do rebound, as I believe they will, you'll make quite a lot of return in the 2x ETFs, and they're getting cheap, like getting close to all-time lows on those. So I would say AMD, DRAM, Google, and Microsoft, those are the ones that I would buy for continued long-term growth. Microsoft is the only one that's not doing well right now. And Google is obviously getting a very nice dip by. Google's chart is just incredible. It's shown a lot of strength, and this pullback, I think, is a chance for people to get back into the stock that maybe missed the run up from, like, the 250 to 400 range. I think it's a gift for people to get back into. Obviously, these are just my opinions. There's a lot of more stocks that I own, but these are the ones that, to me, there's not much speculation surrounding them. To me, you want to own AMD and NVIDIA. On the dips, that's when you buy them. The memory stocks, they keep going up. So that's one of those things where the momentum has just been unlike anything we've ever seen. But I would go into the ETF. For long term, I would go into the ETF, so you don't have to just pick one. Although Micron has been the best one by far. And SanDisk, in terms of valuation, or in terms of the movement of the stock, obviously SanDisk was one of the best things ever happened. If you were somehow able to get into it and hold it. I got into Micron and AMD, 2 out of the big 3 moves in the last year or two. I made the biggest amount of money I've ever made on anything, at least percentage-wise, on AMD options. And I wish I had done the same with Micron. If you had bought options throughout the year on Micron, only calls, you would have made money almost every single time. But it's hindsight. So, the companies right now that you want to own for the future, I think it's those 4 off the top of my head. You want to own DRAM, probably, when there's a dip. You want to own exposure to the memory stocks. But even better, I think long term, will be AMD, Google. If the AI bubble pops, you have to think about what companies will be best suited for that. I think Google survives everything. I think Google is the cockroach stock, essentially. If AI turns out not to do anything, which is unlikely, it's unlikely that it's going to fail in the long run. But if AI turns out not to be the golden goose, well, then we just revert to where we were before AI. And Google was still undervalued then, but it was still the company with, close to the most income in the world and all these other aspects that they have. Google, I think, is best suited for any situation. They own a percentage of Anthropic, like 15%, I think. So they have direct exposure to AI. They have Google Cloud, which is, if not the best, one of the 2 or 3 best cloud services in the world. They have Google Search. They have Google AdSense. They even have Waymo exposure. They even diversified better than Apple tried to do. when Apple tried to make a car allegedly years ago and failed miserably. Even Nvidia, I think, is trying to do something like that. Google, they've got some of the smartest people in the world working for them. Just one of the best managed companies ever. But people didn't want to buy Google when it was $150. And somebody stupid like me sold it at $200 because I didn't trust the breakout. I thought that I was going to get to buy back in cheaper. Very dumb. Wish I could go back and buy a lot more in the 150 range. But long term, I believe in Google. I believe in AMD and NVIDIA. It's just that AMD, relative to NVIDIA, has done better over the last year, believe it or not, and is cheaper. So those companies, and I would throw in Microsoft. If you want to have a software play, I think you do. And I think Microsoft is the obvious play because it's Microsoft, the other best company in history. You can disagree with some of their business practices and the people that run it, but they've been doing extraordinary, and I think they will continue to do. And I think the other Mag 7s will probably rebound. I've kind of switched my bias on Meta as well. I used to not like Meta as a company, but I would say Meta's looking good for the future. They have a lot of dominance in social media, and they make a lot of revenue. Not nearly as much as Google and the others, but they have a lot of revenue. I would be very concerned about the CapEx of Meta. To me, Meta is the biggest red flag in terms of CapEx. Maybe not for this cycle, but I factor in what Zuckerberg was doing with the metaverse, which was completely stupid. Like, one of the those are the kinds of CEO decisions that are so horrible, and that's why this stock was like $90. Not the only reason, because 2022 was a bad year for stocks until December when everything took off. But the CapEx is concerning for Meta, not because they don't have the money, but because they've shown reckless spending in the past. And there's a lot of competition. So that's questionable. But I think long term, Meta will go back up too, because the market clearly values them very highly. And they're still relatively cheap compared to these other companies. They're only in the $1 trillion club now, 1.5 or something like that, I think. So there's room for Meta to go up as well. But of the big boys, Google is my top pick and AMD. And I would throw in, be careful, but I would throw in some memory exposure if you don't already have it. Because these memory stocks are no joke. They're so important to the AI build out. And the fundamentals of these companies look extraordinary. So that, and nothing has really changed for me about Microsoft. I would accumulate more in Microsoft when it's cheap, which is when you want to buy stocks, when everyone else is fearful. But I'm not just saying buy software stocks on the rebound. Accumulate them when they're cheap. And, if Microsoft has another pop, might be good to sell it because it was not able to hold its gains. But you want to look at the stocks that are predominantly holding their gains relative to the index and to the industry. And I know Microsoft isn't doing that, but Google is basically holding up very well, despite the fact that there's a controlled sell-off on Google. It's just a chance to get back in cheaper, I think, before the next leg higher. But the market, after July, might start to cool off. It happens. But there'll be good chances to get back in. We have a very interesting range established in the market right now. It's a big range because we're close to as high as we've ever been on the market. But we saw how far we could fall and how fast we could fall with a lot of fear going on with the Iran war. Good news is economic data is looking good for the most part. Some of it's looking bad. PCE was also very high. But oil prices are coming down, which is the biggest thing, because that is inflationary. And we're getting that settled, looks like. Some people are actually bullish on rate hikes. I think the Fed will make the right decision when the time comes. I think we're past worrying about whether we get rate cuts at this time. We'll get them at some point, hopefully, if we don't fuck the economy up. But stocks are the best thing to do right now. You got to have your money in some kind of stocks because you're fucked if you do and you're fucked if you don't. Inflation's so high, you need to have those 400% gainers in a year. It's only a shame that I didn't have all my money in AMD, but you gotta have some diversification, but you need to have a lot of money into the stocks that are going to be winners. And you have to fight inflation, and you also have to be leveraged in case, we're all out of a job one day because of AI. So there's nothing better to do to invest in the companies that are going to be there and the ones that will be making the revenue. So those are my picks. Certainly I have a lot of other stocks. I'm invested in a lot of dividend stocks, a lot of ETFs. I'm very, very diversified, but the biggest concentrations in my portfolio has always been in tech and semis, AMD, NVIDIA. Those are my biggest positions. And the company that I've always been bullish on but haven't put enough money in is Google. I think it's a no-brainer. I think speculating on these other companies is nonsense. Google is going to win no matter what. I think Amazon's also a little bit underrated, but the stock just doesn't have that much volatility, but it's a fantastic company. AMD, Google, and I would throw in Microsoft. And be cautious on the memory stocks, but the memory stocks, man, they keep going. Very bullish report on Micron. I think without the Apple news, we would have had I think what we saw on Friday, if you're looking in the markets, that's what we might have seen on Thursday without all of the bad news and data. You got to be careful in this market because it's getting harder to trade. We're not just going up every day like we used to, but I think we're consolidating. And even if we have more of a pullback, I think we're going to go higher in the long term. That's what I think will happen. But this is not financial advice, just my opinions. But you look at the numbers, and all these companies have excellent numbers. There's no reason to speculate about what these other companies might do. It's what these companies are doing now. And if we're going to speculate, we're going to take the companies that are winning now, and I'm going to expect them to win later too because they have the leverage.